We just got a serious development in the crypto market, and most people are not paying attention to the real signal. A major whale who made millions shorting the market has now flipped bullish. That's not random. That's positioning. Right now, XRP is trading around the low $2 range. The market feels weak. Bitcoin pulled back. Ethereum is struggling to hold key levels. Headlines are dominated by US-China tensions and uncertainty around upcoming political statements. And this is exactly the type of environment where emotional traders panic. But smart money watches liquidity. When a whale closes a profitable short and opens a large long position, especially during uncertainty, that tells me they are preparing for a potential reversal or volatility spike to the upside. Does that guarantee immediate green candles? No. But it tells me something important. Not everyone with size is bearish here. Here's the reality. If your entire investment thesis depends on one speech, one announcement, or one daily move, you're trading noise. Markets move on narratives short-term, but they move on structure long-term. Personally, I don't let short-term price swings control my conviction. XRP at $2.30 or $2.50 doesn't change the long-term thesis. It only changes the temporary value on a screen, and I've trained myself not to react emotionally to that. Yes, crypto is volatile. Yes, leverage wiped out many traders recently. That's part of the cycle. But volatility also creates opportunity, especially for those who think long-term. Diversification matters. I'm not all in on one asset class. Crypto is my highest risk allocation, but it's also where I see asymmetric upside over the coming years. So when I see whales flipping long during uncertainty, I don't panic. I observe. Because historically, major upside moves begin when sentiment is confused, not when everyone is comfortable. Right now, the market feels tense. That doesn't scare me. It tells me something is building. While most people are focused on short-term price swings, something much bigger is happening behind the scenes. Ripple continues to expand. And this is where the real story is. Recent reports show Ripple moving toward a major acquisition in the treasury management space. A billion-dollar level play. This is not a hype headline. This is infrastructure building. Think about what that actually means. Treasury management software is used by CFOs, corporations, and enterprise finance teams to manage liquidity, forecasting, and risk. That's serious corporate plumbing. That's not retail speculation. When Ripple integrates deeper into treasury systems, it moves crypto closer to enterprise infrastructure. This is how adoption really happens. Not through memes, not through influencer hype, through corporate rails. If Ripple strengthens its position inside liquidity management and treasury operations, that directly increases the probability of on-chain settlement becoming part of real-world financial flows. And what network sits at the center of that ecosystem? The XRP ledger. The more enterprise traffic, the more settlement flows, the more integration. The stronger the long-term structural case for XRP. This is why I don't panic over short-term dips. Because companies building billion-dollar infrastructure don't care about a 2% daily red candle. They care about positioning 5-10 years ahead. Now add to that the macro layer. There are talks about potential rate cuts. There is political tension between major economies. Gold is hitting highs because of uncertainty. Markets are reacting to every speech and headline. But uncertainty eventually resolves. And when liquidity returns aggressively to risk assets, the projects that built during the quiet phases tend to outperform. That's what happened in previous cycles. I remember when XRP was sitting around $0, $50. Sentiment was terrible. People were calling it dead. Fast forward, and those who accumulated during fear saw massive percentage gains. History doesn't repeat exactly, but it rhymes. So when I see Ripple expanding corporate infrastructure while the market is distracted by short-term volatility, I don't see weakness. I see positioning. And long-term positioning always matters more than short-term noise. Let's talk about something most people don't want to hear. The market does not move in a straight line. Right now, traders are nervous. Every speech, every Federal Reserve comment, Every headline about trade tensions creates instant volatility. One moment we're red, the next moment we spike. That kind of environment shakes out emotional money fast. But here's the difference between emotional trading and strategic positioning. If you zoom out just 1 year, XRP is still significantly higher than it was during the fear phase. There was a time not long ago when XRP was sitting near $0, $50. Sentiment was horrible. People were frustrated. Social media was full of negativity. Those who bought during that depression phase are still sitting on massive gains today. That's perspective. Short-term pain often creates long-term opportunity. Now, let's address leverage because this is where many people get wiped out. Leverage is a tool. It can multiply gains, but it can also destroy capital fast. We've just seen what happens when too many traders are overexposed on one side of the market. Liquidations cascade. Fear spreads. Charts look ugly. But that doesn't mean the long-term thesis changes. It means risk management was ignored. Personally, I treat leverage carefully. Sometimes I hedge. Sometimes I open small protective positions during uncertainty. But I never let leverage define my overall strategy. Because the real wealth in crypto historically has come from patience, not constant overtrading. Another important point. Institutions are not backing away from crypto. Major financial players continue exploring, integrating, and building exposure. When serious capital enters a sector, it doesn't do so for a quick 5% trade. It positions for structural shifts. That matters. So when short-term volatility hits, I ask myself one simple question. Has the long-term adoption thesis changed? If the answer is no, then price dips become data, not panic triggers. Markets are emotional machines in the short term and rational machines in the long term. Right now, emotion is high. But structurally, the bigger picture still looks intact. Let's step back and look at the bigger picture. While retail traders are stressed about daily candles, something much more important is happening in the background. Capital alignment. We're seeing increasing political and institutional involvement in crypto. Reports suggest that powerful families and political figures have generated significant wealth through digital assets. Whether you like politics or not, one thing is clear. When influential capital benefits from an industry, that industry doesn't simply get ignored. Money influences direction. If billions are being made inside the crypto ecosystem, especially by people close to power structures, the probability of aggressive anti-crypto policy decreases, at least in the near to mid-term. Now combine that with institutional expansion. Major financial giants, asset managers, banks, and wealth management firms are steadily increasing exposure to digital assets. They're offering crypto products to clients. They're building custody solutions. They're integrating blockchain research divisions. That is not bearish behavior. That is strategic positioning. And here's what many retail investors misunderstand. Institutions don't chase pumps. They accumulate during uncertainty. They build during pullbacks. They expand infrastructure when sentiment is mixed. Sound familiar? That's exactly where we are right now. Yes, gold is pushing toward highs because global uncertainty exists. Yes, macro tension between major economies creates short-term fear. But markets rotate. Capital flows from fear assets back into risk assets once clarity returns. And when liquidity comes back aggressively, it doesn't usually start with unknown micro tokens. It starts with established names: Bitcoin, Ethereum, XRP, the top-tier assets. Why? Because large portfolios require stability, depth, and liquidity. You can gamble on small-cap explosions if you want. That's your strategy. But I believe in structured portfolio building. I believe the strongest performers over time are the assets that survive multiple cycles. And XRP has survived regulatory battles, market crashes, and global uncertainty. That resilience matters. So while short-term volatility continues, I'm not focused on the noise. I'm watching capital behavior. Because when money aligns with infrastructure and influence, long-term direction becomes clearer. So now the real question becomes simple. Are you trading headlines, or are you investing in cycles? Because those are two completely different games. Short-term, anything can happen. A political speech can move markets. A surprise rate decision can shake volatility. A tweet can trigger liquidations. That's the reality of crypto. But long-term? Long-term is about adoption, infrastructure, capital flows, and survival through cycles. And when I look at XRP specifically, I see something important. I see a network that has survived regulatory pressure. I see a company continuing to expand enterprise integration. I see institutions entering the broader crypto market. I see political and financial influence increasingly aligned with digital assets. That combination is not something I ignore. Now, does that mean XRP goes straight up from here? Absolutely not. There will be pullbacks. There will be corrections. There will be volatility designed to shake out weak hands. That's part of every major market cycle. But if you zoom out and study previous cycles, you'll notice something interesting. The biggest gains often happen after periods of doubt and consolidation. That's why I focus on positioning instead of reacting. If you're using leverage, manage risk carefully. If you're trading, understand volatility. If you're investing long-term, stick to your plan. And most importantly, don't let short-term fear override long-term conviction. If you found value in this breakdown, make sure you stay connected, stay informed, and keep your strategy disciplined. The next phase of this market won't reward emotional decisions. It will reward preparation. Now let me say this clearly. I am not telling you to buy, sell, or hold any asset. This is not financial advice. Always do your own research before making investment decisions. Crypto markets are volatile and high risk. Never invest money you cannot afford to lose. Manage your exposure responsibly and understand the tools you use. Short-term noise will continue, but long-term structure is what I'm watching.